Okay, so I cut loss, I think, on this bar. So that's the cut loss bar. My entry is probably on this bar. So this is kind of a breakout type of the entry. So in terms of the entry, let me just analyze the structure first. So one thing about this stock is this is generally a low volume stock. So you, when I hover this, you can see that on a low volume day is about 100k, 100, 200. So when there is increasing of the volume, this probably have maybe 1 million to 1 to 3 million. So my reason to enter the trade is mainly because of the breakout with the increasing of the volume. So there's quite a lot of the speculating activities. So this is the downside of this type of the stock. So it's like a illiquid stock. And when the speculators or when the smart money is becoming inactive, it will be a drag for normal traders like you and me. So my entry is based on, I think, the hourly time frame, and right after the breakout. So I see the breakout. I think I cover it somewhere around here, and I keep waiting until it sort of breakout here. So after the breakout, that's rely on kind of the structure, this small little structure. So that's my breakout trade. And I think at this point it's probably still all right. The entry looks okay, and in terms of the analysis, I think is good as well. And the only thing that's become sour or turn bad is right at this rejection bar. The rejection bar comes with the increasing of the supply, suggesting that there is certainly supply and also reflected in the results as well, and is confirmed by the next bar. So that is the confirmation. Despite that, the volume becomes slightly lower, but still the presence of supply just prevent a successful breakout. So at that time, I still holding up because I just want to wait for the subsequent action. Maybe you can just have decreasing of the supply, which it did. So we have a decreasing of the supply, but we had this big bearish bar, although that comes with really, in general, it's generally low supply, but still, I get out because it's kind of trigger my stop. Actually, my stop I think is somewhere around here. So not this bar, is actually maybe even lower. So somewhere around here. So that's my stop, just below the swing low level. So that stopped me out. And on high side, we have another rally up, but you can see there's no demand. The demand is of inferior type. The quality is not good. So it's just like they are inactive. So we don't really see the smart money or the big speculators jump in. So generally they are inactive. So I wouldn't be too bearish at the moment, because if for this type of a stock, like especially if you look at this, there's literally no liquidity, and if they want to just buy this up, then they can come in at any time, and that might change the structure. So that could become another spring. So temporary commitment below, jump back up, and then can continue to test the high again. So I will just keep monitoring this, but at this point I already stopped out. So just for risk management purpose. So that's a HPMT. Okay, so Dave just say, is the top when you exit a sign of distribution? Dave, which part are you talking about? Is it the top you're talking about this? So the rejection tail? Oh yes, okay. Well, I wouldn't say it's a distribution structure, but certainly there is a rejection. There's supply. There's supply come in. There's some selling, profit taking. But apart from these three bars, you can see that there's no selling at all. So there are a lot of the profit taking because there are some people they sell into the strength, and there are some people, they see that there's a failure of the breakout, so they cut here. So these are the early exits. So right after that, there is no selling. So it's just like there's not enough liquidity. So that's why we see this kind of the ease of movement. So when there's not enough liquidity, even with a slight increase of the volume, you can just push a price down or push a price up. So that's the downside of the illiquid stock like this. So yeah, so this is a HPMT. But overall, it still have a bullish structure. I wouldn't classify it as a distribution structure. So next one, Hong Leong Cap. So Hong Leong Cap is a stock that's I covered a few weeks ago. That's based on a breakout trade, a very typical one. So that's pretty much just based on the structure and also just very normal volume. You can see that throughout this potential or the accumulating structure, there is literally decreasing of the supply, and subsequently during the sign of strength rally, there is pickup in terms of the volume, despite that is kind of on the low side. But bear in mind that it's quite an expensive stock, like 6 or 7. So generally, it's still tradable and not too bad. So after that, it just formed a very shallow type of the backup action. So entry is probably can be somewhere around here as long as you don't really go too far away from the backup action, because that is the stop. So the thing that I'm concerned is actually the stop. So once I get a stop fix, generally not too wide, then you can just leave it run. If that become like going nowhere, then I might just exit. But for this, you can see is still keep running, and that's quite a significant run. So in terms of the reward to risk, so if the risk is here, so that's the risk. The reward is actually maybe 3 or 4 times, so it's quite nice. So despite an impressive run, uh, the target that I'm looking at is still right at the high. So at this point, I think it makes sense to lock in a bit of the profit, so you can just close half of the position. So close half, and maybe you can wait for another one to touch the previous swing high level, somewhere around 875. So at the moment is just lock in profit, half of the size, and hopefully you can just have another push before you had a reaction. So there's a Hong Leong Cap. It's quite a straightforward trade.